everyone to today's show. I'm really excited today to be talking about the history of Bitcoin and a very particular event. We're going to be discussing the very first Bitcoin Obituary. So this was 2011 that this happened. We're going to talk about all of the events that led up to this, all of the aftermath that occurred. Super interesting story about that big rise and then initial crash back in 2011. And I'd like you to welcome back onto the show Bharath Rao, who's the CEO of Leverj. Welcome back to the show.
Glad to be here.
So I wanted to have you involved in this discussion. I mean, you're a trader who's been a trader for forever, and then you first got interested in trading Bitcoin because of this first obituary that was put out. It was put out in Wired, and it's called The Rise and Fall of Bitcoin. This was at the end of 2011 that this came out. So this is what first got you interested in this from a trading point of view.
That's correct. So when Wired, printed this article, they had this chart of Bitcoin and how it went to $30 and it crashed back to $2. So it's all over. It was it had a nice run. But any trader who's been in the game for significant duration would recognize this chart as something very, very big, something an asset that could do 100x. And this is not unique to me. I think many traders saw this. So they were just drawn to it. They started accumulating. They started buying. In those days, I think Mt. Gox was really the only exchange. So most of these traders started figuring out how to move money there, how to start trading. In those days, you had to remember that Bitcoin had no. It didn't have the same reputation it had today. It was pretty much not accepted anywhere. There was really nothing around it. It was a number you change on a bunch of computers. No one knew why you would pay anything for it. But purely from the chart, purely from the way it exploded from a base of like $1 all the way to 30, it was just the sign of like a big bang that would lead to a huge expansion in the future. My personal guess was it would at least go go another 30x, just like it went earlier, because most of these moments are fractals, as you can, if
So
you zoom into
30x from like the peak of $30 would have been
that's correct, 9,000, 9,000, yes.
right.
And it has exceeded, of course, that amount.
Yeah.
That is optimistic, of course, but even pessimistically, it should do 5,000 at least. So. I think many traders started accumulating coins when they saw this chart. They started, yes, this is it. And it's very ironic that an obituary brought in a lot of people. It brought in a class of people that were not in this. Before this, Bitcoin was full of, techies, cypherpunks, this kind of crowd. But now you got in actual traders from financial world and. I think that brought in money, and the rest is history.
Absolutely. That fascinates me, the idea, as you said, an obituary brought in all of this movement and it got people really excited. And this isn't the first time that this has happened. It happened in a different capacity, which is what actually led up to this initial spike up to like $29. And that article was an article about the Silk Road. And when that article came out, it gave a huge amount of publicity exposure to Bitcoin. And that was one of the catalysts for this big momentum that led to this initial run. So let's go back into history a little bit. Let's talk a little bit about what happened in this lead up. What are some of the events that people attribute this spike to, and then the ultimate fall there. So if you look, let's go into this obituary because the obituary is the focal point for today's discussion. So first of all, this discussion suggests that it was a Forbes article that initially led people to be looking into Bitcoin. And there was a story called The New Cryptocurrency. And apparently from early April to the end of May, the price of Bitcoin rose from about 86 cents to $8.89. So I'm going to put up a chart here so that you can see that in the... where is it? So you can see that there. So if you look around January 2011 over there, suddenly go a little bit further, you can see that Forbes article. And immediately after the Forbes article, you start to see this big spike. So the obituary talks about this as one of these catalysts. And then you had that other article that I mentioned. You had Gawker publishing a story. It was about Silk Road. So that came June 1st, 2011, talking about the Silk Road. And that was just a huge catalyst for Silk Road as well, that really got it on people's maps. Do you remember that time? Like, were you interested in Bitcoin at all when those articles came out?
No, I was, I may have paid a little attention when I saw the story on Slashdot about Bitcoin getting dollar parity. But I don't remember reading anything about, so I completely missed the whole, the initial expansion. And in those days, I don't think I would have entered if I hadn't seen the spike to $30.
So that's interesting, because I think that a lot of people who were just playing around with this money, they were playing around at a time when it didn't really have any value at all. And it wasn't until a man paid 10,000 bitcoins for 2 Papa John's pizzas that
Right.
people sort of started to go, oh wow, this has real world value. People can actually trade goods for this. This was the first time that this had ever happened. And that was around the time that, this really started to spike. So I think it took that first event for people to get interested, and then obviously we had that big run up following that. So it could be like a combination of those two things. First of all, letting people know this is a real world thing that can be used for buying real world goods, and then just having this publicity, and then you start to have a crash. And this obituary came obviously after the crash, but let's talk about some of the things that could have led to the crash. So let's have a look here. So in this article, I mean, I do want to talk about, or maybe I'll leave this until the end, because it's when he's saying this obituary, like, we laugh now because the price, like, it went up to $30 and crashed, and he's saying that Bitcoin is dead, and we're all going, ha ha ha, little did we know that it was going to go up and reach almost $20,000 not too long after. But what's interesting about this article is the way he's kind of talking about this hype machine around Bitcoin. One of the things he says is Bitcoin was drawing the kind of attention normally reserved for overhyped Silicon Valley IPOs and Apple product launches. So, I mean, I read that and I think, gosh, he doesn't even know what hype is until we get to like the ICO, wave that we later had. And so it's fascinating that he's actually talking about overhyped Silicon Valley IPOs as his analogy. This is all the way back in 2011.
Right. So I did go back and read all the articles in all the forum posts in Bitcoin Talk, and sort of reconstructed the entire history of Bitcoin as it happened in the past. And what I saw was that there were very, very smart people discussing economics, law, politics, and how the control of currency essentially is the key to all of it. And I was very impressed by the depth of the people in there.
Yeah, and even the
So,
article mentions that. So another sentence was, Bitcoin had become, in the public interest spirit of open source peer-to-peer software and libertarian political philosophy, with reference to the Austrian School of Economics. And it's fascinating that you're talking about going back and deconstructing, going through the Bitcoin Talk forum and figuring out what the atmosphere was around Bitcoin and the culture, because a lot of this gets lost these days. People seem to have forgotten. I mean, a lot of people seem to have forgotten, especially if they came in later, that this really was the foundation of Bitcoin. It was this very libertarian, freedom-oriented Austrian economics movement.
that's correct. And it has, I think, from the very beginning, the people, although a lot of people have come into Bitcoin, they haven't changed Bitcoin. Bitcoin has changed them. People who get into this even for profits, once they are steeped and marinated in the crypto culture, they come to understand what this is about and how critical this is for their freedom and for essentially economic control of their own lives. So when people saw Silk Road, the thing that um, that that struck and remained within them was that it is possible to create an economic system where it's purely free market. And there were unsavory sides to the whole Silk Road thing. But if you look at the key contribution of Silk Road was that it is possible to have a fully decentralized system, and it works to a certain, it works to a works very well, impressively well.
Absolutely. And I mean, you had like a long history of Austrian economists who've studied this, who've since kind of become marginalized, especially in the public school system. But like people like Hayek, who won his Nobel Prize in 1974, like, Mises before him, these people who were really talking about this. And then it kind of disappeared for a little while. And then this ethos got revamped with the cypherpunk movement in the 90s.
That's correct. And I mean, when you speak about Hayek, one of the things in his philosophy is that the price is a signal that incorporates all information that everyone knows, and which is why price and charts and all of these things are important. And all traders look at that, no matter what else they do. So when you look at the history of a chart, and you can go back and get a sense of the aggregate information that everyone had at that time. And so even before all of these articles, you would see Bitcoin would go up and it would stay up. It wouldn't completely go down. So when the spike to 30 happened, the traders knew that this is this is an explosion. It's going to bounce off for $2. So after this point, it actually had a plateau at $5 for quite a while, a few months. And I was waiting for it to double bottom to $2, and I had big orders at that at that price point, but it never actually touched that point. It just started going up, which meant traders were very aggressively buying it. They didn't even wait to for it to test the prior low. So when it went up after that, you could see a lot of activity. There were other exchanges, Bitcoinica, a few others, Bitfinex started opening. And you would see people, the volumes catch up everywhere. You were seeing users coming from all over the world. And for the first time, there was a completely, purely transnational market, which had nothing to do with national boundaries. This was another great gift from Bitcoin. If you look at all the other markets, they're all siloed. You have the US markets where the US people trade, the Asian markets where the Asian countries trade. But here there was something where everything was going in lockstep. It was completely 24/7. It was just something unbelievable. So when you saw,
I love that about Bitcoin. I love the fact that it transcends national boundaries. That's the whole point of this. It's opening up the world to possibilities that we've seen, as you said, like stifled or siloed due to like whether it's regulation or these arbitrary boundaries where people say you cannot cross, your money cannot cross. And so there's so much commerce that people haven't been able to engage with, and so many marketplaces that people just haven't been able to interact with, and until Bitcoin, because this has become this national borderless currency that people could use, and it's really opening up the possibilities for what's actually possible in the market.
Right. And you see I think most of our culture is actually technology, right? So if you look at the times when cultures were siloed, culture is defined by how they build things, what food they cook, and so on. And once technology came to a point where things are easily moved around, the culture is global. Electricity, all of these things. McDonald's. You find them everywhere now, and that's part of the local culture because things can move very fast. Now, Bitcoin, what it did was it completely erased the notion of borders, and you have this one huge global market. And this is another realization that led traders to believe that this is going to be something big, because the market for this is much, much bigger than anything else trading anywhere else, except a couple of things like oil and gold, which are global.
And you've got some quotes here about how big people thought it really was going to be. So so after this article, I mean, the article is fascinating because this is written, as I said, from a place of Bitcoin has crashed, it's died, this was this brief flame and it's gone now. But it's got some great quotes in there, the way it's saying like, oh, well, you had this big hype machine that was like this Silicon Valley IPO machine. You had people like Jason Kalankanis, is that how you pronounce it? Who's a journal entrepreneur, called it a fundamental shift, one of the most interesting things I've seen in 20 years in the technology business. You had venture capitalist Fred Wilson, who heralded it as a societal upheaval and the next big thing on the internet. People would comparing it to things like WikiLeaks, PlayStation hacking, the Arab Spring. These are all kind of put on par. You had Andreessen, the coder, who accepted Gavin Andreessen accepted an invitation from the CIA to come to Langley, Virginia, to talk about cryptocurrency. All of these things, it really did seem like there was so much hype, and yet this person who's writing the article is talking about this in terms of, well, all these things happened, and it was just this bubble, and it was just this hype machine, and then it crashed, and that was the end of it. And we'll go into some of the things that detractors said a little bit later, but it's just fascinating that people are so quick to be like, oh, well, this is going up, well, I'll say great things about it. And then as soon as it goes down, people like Paul Krugman coming out and saying, well, I knew it was always a scam and a Ponzi scheme. And they're kind of missing the point, because the people who have made Bitcoin great, the people who have built this entire ecosystem, are the ones who never stopped saying that this is societal upheaval, who never stopped seeing the fundamental shift that this created. People come and go as price movements fluctuate, as you've mentioned. But it's the people who really grew this space, they're the ones who just believed this consistently, regardless of what the price was doing.
So I think actually Bitcoin was underhyped. I've seen all the posts and everything was guarded. It was, the people who made bold predictions, most predictions were conservative. There were some forward-looking statements, but I think none of it was hype. All of it was real.
I agree.
Going through all the posts and going through the, from 2011 all the way to 2017 and beyond. But it's human nature to extrapolate what they see right now. So when something is going up, they always see good things. When something is going down, it goes to, in their mind, it's going to zero. And this is why trading is hard. I
tried it very briefly. So I had a short stint. I started out in Bitcoin because my housemates at the time were trading Bitcoin, and all of my friends were into it. And from an Austrian economics background, I was like, oh, this seems really interesting. But like my first foray into the Bitcoin world was as a trader, which is never a good thing because I've never traded anything in my life. And I only put a small amount of money, maybe it was like $50 or something, and I lost it definitely very quickly because I didn't know what a margin call was. Actually, my housemates used to use what I was doing as a gauge for what they shouldn't do, because exactly as you're saying, we extrapolate. As soon as I saw it going up, I was thinking, this is only ever going to go up, and so I'd be like, I'm buying, and then I could hear my housemates upstairs being like, what? Time to sell. And sure enough, soon after it would crash, and I'd be like, as soon as I get depressed, I'd be like, oh, this is only ever going down, this is terrible, I'm selling, and I'd hear, what? Time to buy. And it's like it takes a very special type of personality to ignore those signals and trust your gut, because you're used to watching these patterns and you're used to knowing how the market is going to move. I definitely did not have that capacity, and I definitely didn't get my small amount of money back.
It's a very interesting story, and I'm happy you lost only $50 because I know people who lost hundreds of thousands.
Oh gosh, I'm not a gambler. I would much rather put money invested in someone's business that I think is going to do well. Even that's a form of gambling. Like you never know what's gonna happen. It's like, but just I'm just not good with that sort of risk. So I'm happy to play if it's like a really small amount. But after that, right. I'm sort of. In terms with money, I'm kind of risk averse, and that's kind of interesting that yet Bitcoin was this amazingly fascinating thing to me that I really got into. because a lot of people see it as, oh, well, it's just gambling. Oh, it could go up and down any day. But honestly, I think a lot of the people who really got into Bitcoin, they weren't in it necessarily because they were like, oh, I really believe the price movement's going to go up. They're in it because they're like, this is going to be a fundamental shift in society. Like, that's what got me involved. I was so fascinated in this from the impact that I thought that it was going to have.
I think the trick to trading is you really need two things, which is patience and discipline. And most people who go to trading, they have neither. When price is going up, they get emotional, they get excited, they don't want to be left behind. FOMO, as I say, fear of missing out. So they jump on it, and usually they're too late, and the price will very quickly retrace. They panic, and now they don't have the discipline to hold through. They don't have the convictions are not strong. So that is from an emotional point of view, but from a market structure point of view, you need to be able to read demand and supply and know where the demand is going to kick in and where the supply is going to kick in. And essentially, these are the only skills. It just takes a lot of refining and a lot of practice and screen time. And I think most people can be taught to trade, depending on their risk tolerance.
But they should probably learn more about it before they launch in, like I did.
Well,
I literally learned what a margin call was because I got margin call, because I'm trading futures on some obscure Chinese exchange, probably around 2013, I think it was, and that I was like, oh wow, I can put a lot more, bet a lot more money than I actually have in there. So like, whether it's $50 I had in there, but I was able to like really leverage that. I didn't really understand why. And then, the price movements, I'd be like, oh, well, it's so volatile, it goes up and down, it'd go down a bit, but I'd be like, oh, it'll bounce straight back, I'll just stay in there. And then I'd find that my positions have been closed out. And I'm like, why? I didn't close that. I think it's going to go back up. Why would that happen? And then it took me a while and a little bit of researching that I should have done prior to realize that's what happens when you trade a leveraged position, is you get margin called. And so that was an interesting learning experience.
Yeah, leverage is an amplifier. So anything that would happen without leverage, it just happens a lot faster. So if you are good, you can make money very rapidly. If you are bad, you can lose everything.
You absolutely can. So I do want to go back. So let's talk a little bit about, because we talked about the hype machine, everything leading up to that, this Gawker article about the Silk Road, everyone's piling on. The price got all the way up to $29 according to Mt. Gox. And let me put up that chart here so that you can all see that. So you get up to like $29 there, and then it just like crashes almost immediately. Now this is a Mt. Gox chart, and most of the trading was done on Mt. Gox at this time. It was a very large exchange. This was prior to the hack. This was then prior to the explosion that happened when it shut down. So yeah, this is where everyone sort of went for their Bitcoin exchanging and trading, and you just see that giant collapse after that peak there in the middle of the year in 2011. It just collapsed there. So let's talk a little bit about that collapse and what led up to that. So I want to go over a couple of the things that this article outlines, because it kind of goes into, oh, well, this is why it happened and this is why it can't work and all of that. So first of all, after this big Silk Road spike, you had Senator Chuck Schumer, oh, don't we just love him, who's like calling out Silk Road and saying that this is, this terrible thing, and Bitcoin is just an online form of money laundering. So he really started this rhetoric around Bitcoin about, the money laundering and the drug use, and he really led that stampede. And so this is like the kind of attention that Bitcoin users really didn't want at this stage until the community was a lot more robust. But you had this sort of happening. This was around the middle of the year. So if we go back to that chart, you could see that it kind of starts to coincide there with the timing of these sort of statements. But then you had more things going on. So you had a giant hack of Mt. Gox. What actually happened was as I said, Mt. Gox was handling about 90% of all Bitcoin exchange transactions at the time. So apparently a hacker broke into Mt. Gox's system and they simulated a massive sell-off. And what happened then was it like drove the price right down, the exchange rate right down, and let them withdraw potentially tens of thousands of other people's Bitcoin. So that was really interesting that, you know, this is the type of thing that's happening around then. And so as I mentioned before, you were sort of on the periphery at this time. You weren't trading yet, but as someone on the periphery, do you remember what you thought about things like this happening?
All right. So in those days, security was secondary considerations for a lot of these exchanges. There were websites when they were trading something that was worth 30 cents. They didn't really put a lot of attention to security. In hindsight, we would say it's a mistake, but in those days, people could just code something up, and within a couple of weeks, they have something that's enabling people to trade. So the security engineering was not really present. There was nothing. There was no really good UX. There was no security. There was no compliance. There was really nothing at all because this was all hobbies. When real real investment people with financial engineering background, people with some compliance background started coming in and started building systems that changed for the better. But even then, security breaches are something you cannot really eliminate. And so I remember when this happened, everyone started saying, don't leave your money on exchange. This was when that thing started, not your keys, not your coins. And that message is still, is still true, still needs to be practiced. It's sort of like right now, it has the same effect as practicing abstinence education, where it's just, people say yes, but nothing really happens. And with every hack, I think we learned a little more, we added a little more, the community created more, demanded more security practices, and today we have, I think, some decent exchanges which are fairly secure. But I do think the real solution is to go to non-custodial exchanges, where you don't have to worry about the exchange stealing your coins or losing it, or things of that nature.
Yeah, one of the things that that I didn't mention previously, because the article just didn't bring it up, and I think it was a big oversight of this rise and fall of Bitcoin obituary, one of the many oversights that we now have in hindsight. They didn't talk about the WikiLeaks wave, which I think was one of the main reasons why we had that giant pump. So it was, the Silk Road article. Obviously, it was a huge, it placed a lot of pressure on there and led people into the Bitcoin world. But WikiLeaks also announced that they were accepting donations, and that spurred a huge amount of interest. In fact, in 2010, they were thinking about it, and Satoshi Nakamoto actually spoke out and said, like, absolutely don't accept Bitcoin right now, because Bitcoin is this fledgling thing. This wave will kill it. We don't need that. Bitcoin needs to grow slowly so that it can, slowly become robust over time. And this would just be too much too soon. And so they held off. And then in the middle of 2011, they then announced that they were accepting it. And that was in large part also reason for the giant spike in the price there. So that was something that I just wanted to mention there, because it didn't come up in the article, which I think is interesting. And obviously we know the story of WikiLeaks about why they accepted Bitcoin. It's because the government put pressure on the intermediaries like PayPal and MasterCard and Visa and said stop processing donations. So the government didn't say to the populace, donations to WikiLeaks are banned. They are illegal. That's not how they did it. They just pressured the only people that could facilitate those transactions not to accept them. So there's a huge amount that the government can do to control people's actions without even making things illegal or putting laws out there. They can just pressure those focal points. And the great thing about Bitcoin is that there is no focal point there. And WikiLeaks then accepted Bitcoin donations, and because of that, they were able to keep functioning. Without that, they wouldn't have been able to, because they had no resources. I mean, it would have been very hard for them to, right, without resources. But then with all these donations, then soon after they accepted Litecoin donations as well. And this really helped just keep WikiLeaks going.
Right, and it's not that the government will ever make something illegal for all the people to do, because it's simply impractical to prosecute millions of people. It is a lot more practical to um, go after intermediaries, and that's just like 4 or 5, and then get their way. So the removal of intermediaries, I think financial intermediaries, is one of the uh, it's a keystone to actually having financial freedom for the whole world. And if nothing else, that if none of this works, but only the fact that we can send value from one to the other without going through intermediaries, that itself, I think, is the biggest value of this entire crypto universe.
So let's now talk about the crash when it happened. Obviously, when you have a giant run up that is super quick, you're going to have an immediate market correction. That tends to be what happens there. So we saw that. But then that was compounded by a lot of events that happened afterwards. So the Electronic Frontier Foundation, before they had been accepting Bitcoin donations, and they just quietly stopped accepting donations at that stage. This article, The Rise and Fall of Bitcoin, the Obituary, says that overnight, Bitcoin went from being the currency of tomorrow to a dystopian joke. Which is, I think that every time Bitcoin crashes, it becomes this dystopian joke. And then it just goes to a new all-time high. So what actually happened there? Now, let's start off. So we talked about the Mt. Gox hack, which was huge. But then you had something else happen. You had this wallet called My Bitcoin, and then they stopped responding to emails, and they were a really large wallet at the time. Now, so there were a couple of things. Bitomat, they accidentally apparently overwrote its entire wallet, and that was the third largest exchange at the time. And then My Bitcoin wallet had these strange things going on, and there's like this long saga which I think we should go into in a whole extra episode, because it's fascinating to kind of unravel this. But essentially, you had this wallet that, after all of these turns of events, then went AWOL with everyone's money. And this was really, really huge. And actually, it was interesting because people speculate that this happened right after the big Mt. Gox hack, because a lot of people were using the same password for both accounts. And so it seems that this guy was able to get into Mt. Gox and steal a bunch of money because he could access passwords, and then was able to use some of the same passwords for the My Bitcoin wallet. And so it goes for what you were saying, Bharath, about the idea that people just didn't take security very seriously at the time. This has started off as play money. People didn't have a lot to lose when it kind of first began, because it's like worth pennies, and then people just didn't think about reinforcing their security as it got more valuable.
That is correct. And actually, the events like that were happening very regularly. There's a few events on this chart, but something or the other was happening every week. Some exchange failed, some wallet had a bug, or it was just total chaos. But so I don't really think that anyone contributed to the rise and fall of this coin itself. And chart traders don't actually look at the actual events as causes. What happened was there was a big interest, and people started buying. Price went parabolic, and when price goes parabolic, there's only so much demand that can soak up that kind of supply, and after that, it will always have a deep correction. The more parabolic it goes, the more deeper correction will be. So, from a trader's perspective, all of this doesn't matter. This is something that is a lot of demand. It just shot up. It is entering a deep correction. The question is, you have to figure out where the correction ends and the price starts moving up again. And at that point, try to get in. There are some traders who they don't really care. They will continue buying all the way down because they are looking to accumulate as much as they can, right? So for them, it's every trade they want to be on the buying side of the trade. They don't care about the price. So, but I was not like that. I prefer to wait for the price to stop and turn up, and I would go with that. Um, so yeah, these guys say, this wallet did that, this exchange did that, but this was every day. This was
Yeah, but I think that this really did take a lot of that trust away that people have. Like you had people like Jeff Garsick who said at the time, where's his quote? It's pretty good. So he says that, talking about the atmosphere around the time, so this is again in the obituary, he's quoted there, people have the mistaken impression that virtual currency means you can trust a random person over the internet. And a lot of people still had, to figure out that a lot of these people they were trusting when they're third parties that they're basically entrusting with their Bitcoin, and they figured, oh well, Bitcoin, it's safe and it's unable to be controlled. It's like, no, if you're giving your money to an exchange or to a wallet, then you shouldn't just necessarily be trusting this. And it also goes back to how this was founded. There's a lot of trust in this community. It really started off with people who shared an understanding of the world, shared a philosophy about the world, what the world should be, and that brought people together, and it did create a lot of trust. And so obviously that sort of a ground is absolutely right for someone to come in and start to take advantage of that.
I don't know if that's true, because the Bitcoin was always about working in an adversarial situation where trust is not needed. The word trustless means untrusted.
That's true, but I mean, if you think about the types of people who are in this space, like I could go to any Bitcoin conference and I'd be like, oh, well, these people are good people. They get it. They're in this for the right reasons. There was a certain amount of bonding, like even though people were cognizant of like Bitcoin, it's this money that we're using to get around people who would try to bully us, let's fight with this currency. Like I totally get that, but I do think that if you thought someone was on your side, on the Bitcoin side, that there did seem to be this kind of implicit trust that people often had.
Right. Most of the actors, most of the bad actors were people you barely knew. Who really personally knew the CEO of Mt. Gox or the person running this wallet? No, he's just a username on the Bitcoin Talk forum. The people who meet, the conferences, the first conference I went to was in 2012. San Jose. I think that was the first big conference. Before that, there was no really conference or anything like that at that time. It was just a bunch of people with a common interest. You did think most people were trustworthy because of the depth of their thoughts and their convictions and the work they had put in. But we are talking about people like Gavin Anderson, Nick Szabo, all of these people. Yeah, they're definitely trustworthy. But they're not running all of these services. And
I think it took a while for people to realize that a lot of the vocal people who were proponents of Bitcoin, like Andreessen, these people that kind of, they oozed credibility, and as you said, like you felt like you could really trust them because they were so principled in the way that they spoke, and they were talking about their commitment to the cause, and it just kind of made you want to believe all of this stuff, right? And you're absolutely right that a lot of the people who started these third-party platforms, they're not necessarily there for the same reasons. They can see a market opportunity, and some of them were scam artists, some of them are amazing and created incredible companies that helped a lot of people. Some of them were not. Some of them ran away with a lot of money.
Yeah. I think the most people were just, they wanted to play with technology, and they were not necessarily bad people. They were just incompetent, and they did not understand that you need a good understanding of crypto, security, law, all of these things to build a robust product. They were just, they said, okay, all I have to do is, run a Bitcoin node, just do some RPC, show it on the web page, and I have this business. And there was no real security. There was obviously, it was very easy for hackers to go in and do all kinds of damage. So there were definitely some nefarious people, but most of them, I think, just general incompetence.
Yeah, and that was like when when Mt. Gox collapsed, much later. That's what people were wondering about Mark Karpeles. Was he malicious? Did he steal all this money, or was he just, incompetent to the point of like, it's complete negligence, right? And that's what people are trying to figure out. I do want to mention, so JR from Exciting World Cryptos, I didn't get a chance on my last stream to mention his power chat that he sent through Bitbacker. I really appreciate that, JR. So he said, kept missing the live chats last while. Anyway, I must figure, just figure I catch up on my support. Here is some BTC. Enjoy. Your work is amazing. Always enjoy your content. Sincerely, JR. I really, really appreciate that, JR. And I see that you're in the chat now. So I'm glad that you caught this live one. It is nice to have you here. So I wanted to mention what Amir Taki said around this period about what was going on in Bitcoin. He referenced Gartner's hype cycle. I don't know if you're familiar with this. I'll put up the image here, wherever I got it. So it's this chart that it's like a theoretical technology adoption and maturation curve. It begins with a technology trigger, and then basically the idea is that it ascends to a point called the peak of inflated expectations, and that's what he was saying that Bitcoin had reached when it went to $29. Then it collapses into a trough of disillusionment, and people were saying, like in this article, they were saying that that's where people are right now. They're in this trough of disillusionment, but eventually people get back to like a slope of enlightenment, and then it would end up in this plateau of productivity. Now, we're definitely in a plateau of productivity, but this cycle seems to suggest that that plateau comes in above the trough of disillusionment, but below the peak of inflated expectations. So it kind of plateaus somewhere in the middle there, and we get some sort of equilibrium, some sort of stability in there. And so that's very interesting, because it seems like the history of Bitcoin has been a bunch of those looking graphs, right? Where, but it didn't end up just plateauing. Then we got like another giant peak as people, started to build more in this technology. And so I agree with you, Bharath, when you were saying that at this time, Bitcoin was incredibly underhyped, and really we've seen that because of all of the new developments that have since come in the space, the giant price movements that have come, all of the new investors that have come on board because they're realizing the potential of this technology. And so I thought that was interesting, that everyone was kind of that while some people were discarding Bitcoin and saying, well, this is a joke and all these hacks and it's ridiculous, and as I said, I'll get to some of those things that people were saying in a second, then you had other people who were like, well, no, that was just a hype cycle, and then we're going to plateau somewhere in the middle. It's not going away. We are going to go up from our low of $2, which is where it eventually rested on. It's going to bounce back, and we'll end up somewhere in the middle there. But what ended up happening was it bounced back and then just shot right up and far exceeded everyone's expectations again.
Yeah, Gartner is it's something that the hype cycle is something that's consumed by management, and that's something that's consumed by investors. From the perspective of where we are as participants in this Bitcoin ecosystem, it's not that helpful for us. And I don't believe that we are in a slope of, we are not in any plateau. That would mean the technology is pretty much mainstream, and you could just go into a store and use the technology. So right now it's still very, very niche. Small amount of people in the world have any sort of crypto. The UX is still, I won't say terrible. It used to be terrible, but now it's still very difficult for a lay person. People are afraid, if you take an ordinary person, they're afraid of managing their private keys. They'll think they lose everything. So we still have a lot to go before this becomes mainstream, and we can put ourselves anywhere on the Gartner hype cycle. I think we are still in the disillusionment phase.
Yeah, I think so too, and I think that occasionally we see those increases as people start to get enlightened, but that something will happen and it'll kind of go back down. But what's interesting is that people are talking like, and again, I'm going to go back to the obituary again. So they basically say that all of the vulnerabilities that led to all of these troubles that we saw with the hacks and the money going missing and all the people getting hurt, they were saying basically, this is these type of things persist. And what is interesting is that, like, even now we see these things persist, and yet Bitcoin has continued to increase in value because although they persist, people get smarter. When you have centralized exchanges, they get stronger, they get smarter with their security as well. A lot of the issues did come from these centralized hubs, but people are learning, and people are also creating platforms that can put control of money back in the hands of the users without having to trust third parties, and they're becoming smarter at how they get rid of some of the friction that would beforehand being quite prevalent, and basically stopped a lot of people from getting involved in Bitcoin, because it was really hard to store your own Bitcoin back in the day. You didn't have a lot of these intermediaries that got rid of the friction and made it easier for all of us, and so you had to trust your own security. And these days you have some great hardware wallets out there that make it super easy. Obviously there's vulnerabilities with everything, but the security we're seeing today is much better than we saw in 2011, that's for sure.
That's true. That's true. And so one of the things about all these obituaries is they actually they illustrate this this maxim that there's no such thing as bad publicity, and people read about it. And Bitcoin is not really a religion, but it's definitely an ideology, and people are attracted to this ideology when they read about it, and they over time they get converted, so to speak. And I think people naturally like the idea of being empowered and having financial, financial freedom. So, so every obituary I actually celebrate it. I think it is good that people read about it, and once they read it, like 3 or 4, they know that all these obituaries are wrong. This is the only thing that just dies over and over and over, and comes back up every time. It just resurrects itself every time.
It's I think it's time to go over what some of the detractors were saying this time, because I think it's really interesting. So one of the people that people know I love to hate on this show is Paul Krugman, and he's a very famous skeptic of Bitcoin. He's a Nobel Prize winning economist who gets a lot of things wrong, and you can keep up to date on what he gets wrong by listening to the Contra Krugman podcast with Robert Murphy and Tom Woods, which is fantastic. So check that out if you don't listen to that already. But he was talking about how the fluctuation in price encourages hoarding and how that's a bad thing. And then he's talking about how when he initially talked about Bitcoin and started denouncing it, he thought, like, there's nothing new here. We've already got electronic payments. This isn't interesting. So it's interesting that he's already denouncing something or pushing aside something that he hadn't even looked into, because obviously Bitcoin is quite different from a centralized payment structure. In fact, it's paradigm shifting when you can decentralize trust. But then he goes into he just really kind of lays into Bitcoin. He wrote this article in September 7th, 2011. So back then he's already kind of looking into why this is bad, and then some of the other things that people were saying about Bitcoin. So Stefan Brands, who's a former eCash consultant, a digital currency pioneer, he called Bitcoin clever, but then believed that it's fundamentally structured like a pyramid scheme. So that's really interesting. It says that there are trust issues there. Obviously, there are still trust issues, which is why we always encourage people to do lots of research before getting involved with anything. And people we're also saying there's nothing to back this up. And it's interesting that even since 2011, a lot of these arguments still persist. You still have lots of people saying, well, there's nothing backing it, therefore it's valueless. So what are your thoughts about that?
Well, I think that. Well, first of all, economists are one profession who don't need to have consensus. They have different opinions, and if you go to a doctor and he tells you have diabetes, you could go to another doctor. He's going to say the same thing. But economists can say different things, and they still, it's a functioning profession despite disagreements. So I think that there is something backing Bitcoin. That's digital scarcity, and digital scarcity is. It enables having a unit of account. It enables, if it's fungible, it actually has all the properties of currency. But the big value prop here is that no one can dilute your wealth. No one, a government cannot print 100 million bitcoins and dilute the value of what you hold, but they can do that with fiat. And this itself, if nothing else, this itself is a huge value for cryptocurrency. Apart from that, the fact that the supply is well determined, it's predetermined, and it's at a very steady rate, also makes it very valuable. You understand uh, all the uh, it's all built into the pricing. Right? You know at the schedule of the release of each coin. So these things make for sound money. With fiat, you never know. There's another crisis. There's a crisis every 10 years or so, and the only solution seems to be printing so much money that everyone's um, uh, essentially it's a form of taxation. It's a form of theft. The, the purchasing power is cut into half. You could buy 4 coffees a day. Now you can buy 2 coffees. Um, so so that aside, not having an intermediary is also a very powerful thing. Not having to beg your bank to 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 accept this transfer, not having not being subject to seizure by any arbitrary authority. You may
And that's
not
happened on so many occasions in the past. You look at what
yeah,
happened in Cyprus,
and
where people wake up and 20% of their bank accounts disappeared. Imagine
yeah,
that happening to you. Like, you think, okay, I'm saving up for a new car. I've got, like, $6,000 in the bank. I'm really excited. And then you wake up one day and you have $4,000 in the bank. And you can no longer buy that car. And the government says, oh, yeah, we needed that to pay for these things. You now no longer can pay for the things that you needed to pay for, or cover those bills you needed to cover. Like, I mean, the upheaval that had on so many people's lives,
right, right.
and
Like in Cyprus, it happened in Cyprus. In India, they canceled some currency notes. In Venezuela, you try to cross the border. At the crossing, they take all your gold and money. So imagine you have some sort of value that no one can take. That is a huge, huge value prop that nothing before crypto has ever been able to give you. So
absolutely. And not to mention just the physical limitations of carrying a bunch of gold across the border. Like, yes, at the end of the day, you have something that's physical there. But as you said, if you have government seizing those assets, they can't seize your mind that stores the the private key, right? And so it just becomes a much more efficient way of transferring money across borders.
correct. And I do really think that before crypto, we didn't have financial freedom. We didn't have that independence. We were essentially in a feudal system where that money was leased to you and could be taken away at any time, right? But after crypto, you truly have financial independence. You are your own person. You have your own ownership of your money. So I don't understand why economists don't get that. At least Krugman and his like. But I do think that most people get that, and that is why there's always more and more people coming into Bitcoin. So they may come for the what they think is profits, but they'll stay for once they understand the value. Most people, so even through the crashes after it went $1,000 and then after it went to $20,000, most people with a lot of Bitcoin did not sell, and you can see that in the volume and pricing and all of that. Because why would you give up sound money for essentially unsound money? Why would you give something that cannot be stolen for something that can be seized from you the next day? Just
Absolutely, and even these so-called, stable currencies that we have, like the US dollar. Well, the US hasn't had a great track record of keeping their money stable. They've had hyperinflation before, and what's more, we've lost like 98% of the value of the dollar since 1913. So knowing full well that you're losing 2% of your money a year, like guaranteed when you store it in a bank, versus the possibility of an upside with Bitcoin. I mean, it's no wonder that a lot of people are looking into this as a storage for their money as opposed to a government fiat.
Interestingly, the 1913 is right after we went off the gold standard and we stopped having sound money.
It was the creation of the central bank. 1913 was the year that they
Right.
did that and started being able to manipulate the money supply in this way. And so you've just seen it be steadily devalued by the government ever since.
So it's only 100 years, and before that, for another 100 years, you actually did have sound money, and the country was very wealthy. And after they started diluting the money, you had the Great Depression, you had stagflation, you had all kinds of financial crises that you didn't have before. You had other things like panics and things like that, but they were
But
separate.
we got out of those so quickly. And I should do another episode on the history of boom and bust business cycles in America, and how central banks just exacerbate them. We talk about how they did the policies that just made it better, and they got us out of the Great Depression by doing all of these wonderful things like the New Deal and all of this. And when you actually look at what's happened in the past, we recovered so much faster than we did without all of this government intervention, which just exacerbates everything.
And the reason for that is the same thing, right? So price is a signal, and if you interfere with that signal, people cannot take rational and efficient decisions, and they will take the wrong decisions, and that will lead to a prolonged, slow recovery. And a lot of times, it's better to have a steep but quick crash that recovers very quickly in a day. So think about it this way: if you lose all your possessions for 24 hours, but after that you have all of that and more, it would be less impactful on you than if you lost like 75% of your possessions for like 3 years, right? So time is more um, hurtful than the actual amount of loss, and that is what government does. It prolongs all the negative effects.
Absolutely. So back to the obituary, just as we wrap up here. So one of my favorite lines is when they're talking about that chart that I put up. So they lead into that chart, and I'll put that chart back up so that you can see those key events again. So they say key moments in the short and volatile life of Bitcoin. Now, what they're extracting there, as you can see, it's basically a 6-month period of Bitcoin like going up in value, and some key moments that led to that, and then what they say is some key moments that led to the demise there. And then when they see the price kind of teetering at around a couple of dollars at the very end there, by the time this article was written and the obituary was written, they are now pronouncing Bitcoin dead. They say before, let's consider that dead because nothing was really going on with it, and no one really cares about this thing. Then everyone gets in. It's just this hype cycle, and now the hype's gone. The tulip bubble has burst and it's disappeared. Now, I wonder if the author of this article, so I haven't mentioned the author's name yet, it's Benjamin Wallace. So I wonder if he has actually talked about this since then, and retracted his idea that this was just a bust, and this was the death of it, because I mean it does look like it's pretty convincing. You look at this chart, and if you didn't know better about the fundamental impact that this technology has, you would see that end point over in November there, and you'd think, oh boy, that doesn't look good. We've lost all value. Like, let's say that Facebook had a giant surge in price and it became the most successful social media company in the world, and then suddenly all the prices just went down. The stock value just disappeared, and it went down to where it had started, like just in its infancy. You'd lose hope in that company. You wouldn't consider that it would bounce back. But the thing is that Bitcoin isn't a company. It's not some central focal point that just dies. It's an ecosystem that people believe in, and they understand fundamentally how this can change how they live their lives. So I think people have just been looking at this the wrong way since the start of Bitcoin.
Well, I think with the knowledge and information the author had, this was a reasonable conclusion. And we do see, we have seen other assets, other stocks, which have this little meteoric rise, and then they crash, and then nothing happens. And usually that is to do with, a promise of a deal that never went through, or something like that. But in case of commodities are very different in the sense there is no CEO, there is no earnings per share, there's none of that you have to worry about in a stock. So in a commodity, when something goes up like this, and price retraces, a commodity trader, which is what I was, knows that what is going to happen. This is this is a new asset class. This is something new that there's a use for it. People are using it. There's Silk Road and whatever. There's a bunch of there's a collection of people using it. So if a small group of people can use it, then a large group of people can use it. The value the small group of people see can be scaled to a global size. Therefore, it's a very, very high probability that this will become something absolutely phenomenal. And although the author didn't see it that way, I think traders did. Traders who know markets, traders who have seen parabolic rises and retraces, and they saw it. And when someone does a little bit of research and they look at the depth of the people who are behind it, their discussions, their measured, the way they think and everything, it's an obvious conclusion that this is something the likes we have not seen in decades, maybe in a century. So for me, it was very clear when I saw it at $2 that this is going to be something that's going to change the world. And in those days, when I would say that to people, they would not, most of them would not appreciate it. But I think now it's a lot more evident.
And did you, when you were saying that to people, did they dismiss you back then? Were you telling your friends about it and saying, "Hey, there's this thing that's $2. I think it's going to change the world"? Were they like, "Magic internet money"? Don't think so.
Exactly. Most people dismissed it. Most people did not know why we need it when we have dollars. And their question was, "Well, can I spend it in the restaurant? No. Can I, pay my bills? No." And so, what good is it? It didn't make sense to them. So I think you need vision to see something before it's obvious. And once it's obvious, all the opportunity is gone. So the people who had vision, some of them bought huge amounts of it, and now they are celebrities in the crypto world. But even I think small-time traders like me saw this and said, "Yes, this is something that that will be part of my life for the next few decades."
Absolutely. Well, I'm grateful that I've discovered Bitcoin, because I agree with you. I think that this is a life-changing technology, and as I often say, I think it's the biggest step towards freedom that we've seen in the last 100 years. So here's to Bitcoin not dying, not resting in peace, but going from strength to strength and showing people what is possible in a decentralized world where power is decentralized and trust is decentralized. I'm excited about that world.
Me too. I'm happy that I jumped when I saw it, and I'm happy to swim in this ocean for as long as I can.
Absolutely. Well, thank you so much for chatting with me, Bharath. This has been wonderful. This is the first of a series that we're going to be doing called Trader Talk, where we discuss different historical events in cryptocurrency. We get stories from people who actually lived, through all of that. They were alive 8 years ago, but you know what I mean. People were actually involved in this space, because there's a lot of kind of it's treated as sort of mythology, the early days of Bitcoin. So actually going back and hearing some of these stories and getting first person accounts of what it was like at that time, some of the experiences they had, some stories of people who lost a lot of money or made a lot of money. This is what we're going to be exploring in this series. So really delighted to have you on the show, Bharath. You, of course, are the CEO of Leverj. Where can people go to find your website and your writing?
It's leverage.io. You can go to our blog. You can explore all the educational stuff we have for you. And I am here with on your show for the next few weeks, and happy to share my knowledge.
Absolutely. And people send me the topics you want covered. So this is going to be a very interesting show with people's personal accounts. So I want to be sourcing really interesting stories. If you have stories to share about were you involved when Mount Gox collapsed? Did you lose money there? What about when it went from $1,150 and collapsed all the way down? I think it got down to as low as like $200. So were you involved in any of those? So you want to share your stories? I would love to hear them. Just get a hold of me on Twitter or Steemit or YouTube or any of these wonderful things. BitChute, Memo.cash, Minds.com, Library.io. I feel like I should go through and name all of them. Bitbacker.io. Lots of ways to get hold of me. But I want your stories. I want recommendation of people to reach out to as well, so they can come on the show with Bharath and myself and share their trading stories or Bitcoin stories, going back through the history of Bitcoin. So thank you everyone who was here in the chat. Thank you so much, JR, for the power chat. Really appreciate that. And to everyone who was just here hanging out for the day, really appreciated having you here. It's been wonderful. And thank you to you, Bharath, for sharing your time with us.
Happy to be here. Thank you for having me on.
Wonderful. All right. Chat to you later.